All right, so what happens if we don't pay on time? Or if we don't file our reports on time? Well, the IRS has a plethora of penalties that they love to impose on businesses, and they are very serious about them. This is the one tax I would tell people, clients, if don't ignore any of the taxes, but if there's one tax that you absolutely cannot ignore, it's payroll taxes. Because business owners, even if they are set up as an LLC or they have a separate corporation to limit their liability for the business, that means that they don't have any personal liability if somebody sues the business. They do not have that protection with regard to payroll taxes. So that means the owner of the business will be personally liable for the payroll taxes. Unfortunately, there are a lot of business owners out there who seem to think that they can withhold taxes from employees' paychecks and then just use that money for something else other than paying it. And they get themselves into a lot of trouble by doing that. The penalties are pretty steep, and they get steeper the later you are. So payroll taxes are not paid, the employer is subject to a penalty. Usually they'll give you one out, and that's it. So you can ask them if it's like you just started and you're so new to this and all that. They will usually give you one exception, but then that's it. You use your one. You can't get that abated anymore, which is, again, another reason why employers who have employees, well, that's every employer, businesses that have employees really need to hire professionals to handle the payroll for them, because it avoids them getting into this trouble. So the penalty is based on the amount that was not properly or timely deposited. So 2% for deposits made 1 to 5 days late. 5% for deposits made 6 to 15 days late. So you can see it gets steeper the later you are. 10% for deposits made 16 or more days late, but before 10 days from the due date of the first notice that the IRS sent asking for the tax due. 10% if electronic deposit is required but not used. Most businesses are required to make their deposits electronically. A few small businesses don't have to do that. But if you're required to do it and you don't, you send in a check instead, they will ding you 10% just for that, for their inconvenience. 10% if deposits are paid directly to the IRS, paid with the return, or paid to an unauthorized financial institution. So I don't quite understand why they mean are paid directly to the IRS. I suppose, I don't know if that's not through the EFTPS system, something like that. 15% for amounts unpaid more than 10 days after the date the first notice the IRS sent for the tax due. There are also penalties for not reporting the tax. So this is just for deposits. If you also didn't report on a 941 or you were late submitting your 941, they will ding you with additional penalties. Anyway, so the 941, that's that quarterly report that I was talking about, the report that is filed on that schedule. You know, it's due at the end of the month following the end of the quarter, and they are nice even quarters. So the company will report the wages that were subject to income tax withholding, Social Security and Medicare taxes, as well as the amount of taxes that were withheld. This is information that you have to include. You do have to tell them how many employees you have on a particular pay date, how many you had, what the gross wages are, and those would be the gross wages that are subject to income tax withholding. So it would not include wages where the employees had some pre-tax deductions. So that would be subtracted from that amount. Also, total income tax that was withheld from wages. Social Security wages, amount of wages that were withheld for Social Security or that were subject to Social Security tax, amount of wages that were subject to Medicare tax. And remember, these three could be all different from each other. they aren't necessarily the same because that tax base, essentially what this is doing is reporting the tax base for those 3 different types of tax. So as we saw, tax base is different for each of these. So these 3 numbers could be different, right? So all of that is reported on a 941 form. And then the taxes are calculated on those amounts. So the income taxes, that's calculated at the time that the withholding takes place. And so you're just totaling up the amount that was withheld for the whole quarter. For Social Security and Medicare tax, you're going to take the full tax amount, so both the employer and the employee's portion, which is at 12.4%, multiply it by the tax base to get the total amount of Social Security tax. Same with Medicare tax, we're going to use both halves, the employer and employee portion, 2.9%, and then the federal income taxes that were withheld, and then you're going to compare it to the amount that was actually deposited. So if you are a monthly scheduled depositor, this should all have been deposited before you file this 941, right? Because the due dates for deposit were every month by the 15th of the month. This isn't due until the 31st or the last day of the month following the quarter end. So all those deposits should have been made. Also, if you were a semi-monthly or semi-weekly depositor, they should have all been made. The only time that it wouldn't have all been made is if you're an annual depositor and you're not going to be using a 941. In that case, you're going to be using a 943. Or if you are a quarterly depositor, you're allowed to deposit along with the 941. This is what the 941 looks like. So you use it for all 4 quarters. You just indicate what the quarter is. This is all that information that was up here is shown, entered on the 941. So it's $300,000 of taxable, of wages, tips, and other compensation that was subject to federal income tax. They withheld $24,000 of income tax. All of that $300,000 is subject to Social Security wages. All of it's subject to Medicare tax, Social Security tax. All of it's subject to Medicare tax. Here's our tax rates. They've already got that. So here's our base times rate equals tax right here on the form. All that's added up, and then we add the amount of Social Security Medicare tax to the amount of federal income taxes entered onto this form. Now, for some reason, I don't know why they're saying that they owe $100 here. It's the same. If they had paid $800, if they had paid $100 less, then they would owe the $100, but I don't know why they're doing that. This is page 2. So this shows how often you have to make your deposits. If you're a quarterly depositor, you check the first one. Monthly depositor, you check the second box, and then you indicate how much you paid each of those months. Semi-weekly depositor, you check this box, and then you fill out a separate Schedule B showing the dates and the amounts that you paid. Let's see if they have that on here. Here's the Schedule B and what it looks like. So you can see they paid on the 15th and the 31st of the month. This is the amount that was due on those dates. You don't put the date that you deposited it. The IRS already knows the date that you deposited it because they received the money. This is the date that the liability was generated. So this is the payroll date. So there's the amount for all 3, $69,900. And then for some reason they're paying $100, even though according to their calculations they don't owe $100, but there's some mistake on one of these examples here. So the Schedule B is only used when you're a semi-weekly depositor or when you have a next day deposit requirement. By the way, that next day deposit requirement is only for that particular pay period. So if you generated more than $100,000 of liability on one payday, but then the next payday it doesn't exceed $100,000, you just go back to whatever schedule you were on earlier. Probably a semi-weekly schedule, but for a lot of bigger companies, they're probably always going to be on a next day deposit schedule just because their tax liability is so high every pay period. Let's Oh, I'm sorry. I said it was a 943 for the annual. I wrote up there 943. It's a 944. 943 is for agricultural employees. I apologize. I got those two mixed up. But if you only have to file on an annual basis, you use the 944 and you get to pay it on an annual basis as well. Questions?